Hey folks, welcome to Market Technical Analysis by InTheMoneyStocks.com, your leader in pure technical analysis, avoiding all that Wall Street hype. Today, Thursday, June 12th, 2008. Well, as we get into today's video, folks, we're going to take a look at the charts. What are the charts telling us from a technical basis? And we're going to also look at our mention yesterday that we were switching our bias to a near-term bounce in the markets, especially if we hit that 1329 area on the S&P. And those of you that were with us yesterday, remember that at that point yesterday, we put it at a 60-40 bounce for a bounce. And if we should hit that 1329 mark, again 1329, we were upping that percentage to probably about an 80-85% chance of a bounce in the markets. Well, what did today's market do? We got a little bit of a bounce. Yet we still haven't hit that 1329. So we're going to look at the odds on whether or not we touch that 1329 before bounce possibly, or whether or not we still get a continued bounce in this market after the little bounce that happened today. So once again, InTheMoneyStocks.com switching their bias yesterday in the short term. And again, over the next week to 2 weeks, we're still keeping the choppy market intact analysis with some downside bias. But in the near term, meaning over the next few days or so, we're going to see if we hit that 1329 and continue to bounce on the S&P. All right. Number one, before we get into the analysis today, I just want to touch base on the webinar tomorrow. Not tomorrow, on Saturday, June 14th. Again, that's 2 days from now, June 14th. And again, just to go over what we're going to be talking about, folks, we're going to be looking at trend lines, how to really understand them. We're going to do volume analysis, the keys unlocked, support and resistance points, essential time period analysis, which is unbelievably key to being a profitable trader, and not very many traders know this stuff out there at all, folks. This is for investors, this is for swing traders, for day traders. It can be applied to all time frames, and we do time frame analysis. It's so key. We're going to look at most effective patterns. We're going to do price pattern time. You guys know I talk about that in this video multiple times, and that's how we've been so accurate from these discoveries. We're going to go over all this stuff and more. Live chat analysis. We're going to look at various charts from live stocks and so forth on Saturday. So I do encourage you to come join and sign up. If you're out of country and you want to do it, you email us and we'll send you an invoice on PayPal if you can't get it to go through the website. Either way, come and check out the website. Again, Saturday, June 14th, 1 p.m. to 5 p.m. Eastern Time. We hope to see you there. Now, let's get right into it, guys. Again, this is the intraday chart on the ES, and one thing about this intraday chart, I'm going to do the switch over today. Today, and everyone, I like to announce this, we switched over from the ESM8 contract to the ESU8 contract. So every quarter you switch to a new contract on the S&P Minis, the S&P 500 Futures contract, and there we did the switch over now. So anyways, what we're seeing here now, folks, and this is key, is that early in the day we really had a strong rally. We had good retail numbers this morning, but with the retail numbers there was a problem. What was that problem? Lehman was the problem, L-E-H, the symbol on that. And what Lehman basically said was they did some house cleaning today. They said they have a lot of problems going on, and they got rid of the CFO and the COO, and the stock just got pummeled. All right, it was unbelievably, it crushed. Early pre-market, it was down as much as $2 to $2.50, and this is why you had this fluctuation here in the market, because retail sales came out and they were pretty good. So the market started to get a push up, but then Lehman was tanking, and all of these financials, people were getting worried about the financials, what's going on with the financials, and all of a sudden you get this whipsaw up and down right here, and then the market opens, and this is where things change. All of a sudden Lehman starts to rally. And oftentimes what you'll notice is that when a company is down to 52-week lows and all-time lows and so forth, and they do a house cleaning like that, oftentimes you get a reflex bounce. If it gaps down, oftentimes that's a flush out play, just like the Bear Stearns. Remember the day the markets dropped hard on Bear Stearns, they gapped down lower and then rallied the rest of the day. And in many ways, that's what we saw, at least initially, on Lehman here at the open. So once Lehman started to rally, plus the retail sales, we took off to the upside, and this market really was very strong. The NASDAQ was up about 40-plus points. The S&P was up nicely again, and the Dow was up as much as about 150 to 200 points early on. Well, that lasted only so long. It basically lasted through lunchtime. And what I want to point out here on the chart, and you guys know we're big technical guys. This is what we do. We live and breathe technicals, and that's how we've been able to call pretty much every major market move over the last year and a half. All right? Now, what I want to show here is a little head and shoulders formation, and this was a big alert system here on this, all right? Notice the head and shoulder pattern, and what you can do here is you can basically, notice this trend line, all right? We're connecting the low, and you can even draw it over to here, but you're connecting the low to the neckline low of this over here, and this is the breakdown point, all right? So here you have the market trading up, down, up again, down, and you can almost look at this as a little bit of a double top area, and then it tries to rally again and it fails, and if you have your trend line in here, you're ready to go on the short side should you read this correctly. And again, this is all in the webinar, guys. You come and do it. We'll do head and shoulders. We do stochastics, MACD, volume analysis, time analysis, pattern analysis. You name it, it's done. And once you break this and close below, that's telling you something's wrong with this market, all right? And this is going to fall. So here we are, folks. You break it and you move down. And you know you're going to have support at the 50 moving average here. So you break it down to the 50. You trade in a bear flag pattern, all right, which is another pattern we go over in the chat room. Bear and bull flag patterns, how to recognize them, how to count them out and properly and understand the moves. And then look at that. Off that bear flag pattern, that tells you another fall is coming, and drop. Pause, drop, pause, drop, all the way down. Quite impressive on the downside there off that pattern. And it basically told you what it was going to do. It's just a matter of reading it correctly and understanding it. And these, by the way, this is on the intraday. Those of you that are swing traders or investors, you find these patterns on the dailies. You can find them on the weekly pattern, on the monthly. You can go back 50 years and it works on the daily, weekly, monthly, or the intraday. Whatever trader you are, whether you're a day trader, a swing trader, or a long-term investor, it all applies to all time frames. And that's the beauty of this. This is mathematical. This is geometry. This is all the fun stuff that most of us don't like, but you know what? When it makes us big money, trust me, you're not going to be arguing with it. So in any case, notice the big fall, then you get a little bit of a tail and a reflex bounce into the close, and notice this point right around here was a gap fill of the day, so we're going to look at that on the SPY, and I'll show you that. Let's look at the SPY here, all right, on the intraday. Check this out, guys. All right, right there. So you have basically, this is the gap fill in this point, and notice you're coming right down. You basically pierce it to get all the little weak hands out, as we always talk about, and then look, rally right off of that into the close. So if you're a buyer, you're going to want to buy there, even though once it goes a little lower, you can even wait for the pierce. And on the NASDAQ, that's even clearer. Let's take a look at the NASDAQ. So here's the NASDAQ from where it closed yesterday. Let's draw that line over, and there you go. You don't get more accurate than that on a gap fill bounce. So obviously, should you play that head and shoulder short pattern, you're short, you get that gap fill, where the chart fills the gap, and that's again another thing we go over in the webinar. That's where you're moving out of your short position, and you can actually go long for a bounce right there, for a scalp bounce, and you see that move right there. So just a phenomenal day for the technical side of things, just looking at that. Long story short, the market did come off its highs, but it still got the bounce, which we had talked about yesterday. And it's no fluke that we went to a bounce bias yesterday, guys. We're seeing things in the charts. We're seeing sentiment indicators. We're seeing price pattern time indicators that were telling us the market was oversold and needed a bounce. The only thing we have a question of now is, do we need to dip and touch that 1329 mark? And you have to almost favor that, yeah, at some point you need to dip. Right now in the S&P, we're about 9 to 10 points away, maybe about 10 points away, give or take, from that 1329 mark. And it would be comforting to know we hit off that resistance point. That's what you got to say. So it doesn't mean you have to, and we're going to still keep our bounce bias in the market here. But at the same point, it wouldn't surprise us to see a quick dip down there, and then a little bit of support come in, and then we get a better bounce out of this market. So we'll keep watching for that. Watch for that 1329 mark. I repeat, 1329 on the S&P. Should we come down and hit that, then we're going to raise our chance of a bounce even higher than that. Right now, it's still around that 60-40 mark, which is good, but frankly, we got that bounce today, so maybe even 50, 55, 45 now. You know, we really want to see that 29 tested before continued bounce. We still favor it slightly here, but again, it would make us feel much more confident, and we'd raise that percentage should we hit that 1329 mark to probably like 75-80% chance of a bounce off of that level. All right, guys? So let's look quickly at the daily, as we have not that much time left in the video. And by the way, guys, Apple got smoked today. Research in motion. A lot of tech has gotten very weak here. And I want to show you these patterns in Apple. I mean, you're talking about a major M pattern in Apple now. Look at this M pattern here. All right. Now you want to see we're hitting the 50 moving average. This is support here on Apple. Doesn't mean we're going to hold it, but the next stop on Apple's here. The question is, do we create the A pattern to the side or up until we flush down to that area? That would be the next major support area on Apple. But there's a lot of speculation on Jobs, on Steve Jobs lately, and what could be possibly going on with Apple and him. So we'll have to continue to listen to what's going on there. Baidu, look at we talked about this when this has actually happened. We talked about this M pattern, and then we talked about the A pattern, and look at how it came to fruition, and look at where we're sitting now. So Baidu's actually sitting on good support here. We'll see if that holds. It's very possible it does hold for a bounce, and that almost yields us that there's a fair chance of that bounce. Now, quickly to touch on the XLF, guys. Remember in yesterday's video, we talked about the XLF double bottom, and look at that. Double bottom, and what happened today? You get a bounce off of that. So, overall, the charts will tell you everything you have to do. No, come join the Swing Trade Alerts. Come join the E-Mini Stock Chat, because we go over all this stuff constantly throughout the day. It's a whole month for $199. You can't beat that. You get to ask us questions. We point out and do market analysis and coach. Phenomenal. Join the Swing Trade Alerts. We'll talk to you all tomorrow. Let's see what tomorrow brings. Take care.